Whether you're thinking about getting into business or thinking about buying a business, the most important decision that you make is the business that you get into. Is this a business that's well positioned in the market? Is this business doing well? Would you be paying the right price for this business, or would you be paying the right premium to enter this market if you're starting a new business? So, as an investor, if you're trying to be an investor, the key question is, where does this business stack up against what other opportunities there could be? This is the question you always have to ask yourself, whether you're thinking about getting into business, buying a business, investing in something, even if it's not a business. That is the key question. Is this the best investment that you have in front of you? Is this the best place to put your money, your time, your resources, or whatever thing that you might be investing, your advice? There's lots of different things that you can invest. But today, I'm going to be covering a few different types of businesses that you could be buying and where they stack up against other opportunities that you might have in the market. So let's dive right into it. I'm going to go onto a site that I like to use to find different deals. These are businesses that are actively listed online that you could buy today if you have the right backing, the right situation. But we're going to talk a little bit about which ones are good and which ones are bad. So this is called Biz Buy Sell. There are all kinds of these different sites. This is just one of the more popular ones, but I'm going to look in Florida in all industries. I live in Florida. We're going to see all kinds of different industries here. And I'm just going to give a little bit of my take on whether these businesses are good buys or not so good as a buy. And the first one that we have here is a chiropractic business. I think these are decent businesses, but the big problem with anything that's a medical business that's below this kind of like million, I mean, this is doing $745,000 in cash flow. That's pretty good cash flow. The biggest problem with these typically, though, is that they're a little bit more of just a high paying job than a business. So it depends on the type of business here. I'm going to give this one just in general for the level of business that most people would be buying. I'm going to actually give anything that's a medical business probably a D tier rating, because they are so often just tied to whoever was the actual doctor of practice, and it's a very relationship based business where you're actually probably going to lose most of the customers or maybe most of the employees when that business trades hands. Now, the bigger these businesses get, the less that's the case. You might find a much bigger chiropractor business that's actually a lot better because it has layers of management in place and there's a bunch of doctors working in it. But for the most part, the average everyday person buying a business, any kind of like medical business outside of maybe a med spa, which is a different kind of business model, is just going to be a bad purchase. I wouldn't recommend it at all. Now, this is a massive business. This is not the size that someone that's your everyday purchaser would be able to buy. It's a $28.5 million business, but a SaaS business can be a really good buy. This is not something I would recommend for everyone, but for someone who maybe has a background in this, maybe you come from the world of SaaS sales, maybe you've been selling to SaaS customers, business to business customers, and you understand, maybe you have a book of business and you could sell a different product to them. You already have a lot of contacts, or you know how to find customers in this. This could be something that makes a lot of sense. I'm not going to give this one a very high ranking though, because I think for the everyday person that's just trying to buy a business to maybe put yourself in a different situation, I don't think this is necessarily a good play, because you're probably going to find yourself pretty outside of your depth. You will probably struggle to understand what you're buying. You might not buy the right thing. You might overpay for it, or you might just not be able to run it properly when you buy it. So for the everyday person, I'm going to give a SaaS company probably a C. I do think that there's some good upside in them, and they tend to be good businesses with a lot of recurring revenue. So if it's already at that point and it just needs someone to kind of keep it running, maybe there's key management in place, it could be an amazing business. But I think most people are going to find themselves out of their depth. Would not recommend it. Now let's find something that I think is a little bit better buy. I'm going to move through some of these. Juice bar, would not recommend that. That's an F tier. Anything restaurant based or anything food and beverage based, I'm going to give an F tier. I just would not recommend that under almost any circumstances. There are some great private equity companies out there that just focus on specifically only that, and they actually know what they're doing. They know how to make these things profitable, and they can do a great job. I'm not saying it's impossible to have success in a food and beverage business, but for the average everyday person, I would not recommend buying this or investing in it. Plumbing business. Now, this one is a franchise. It looks like it's just a startup franchise. So this one is not established. They're just advertising that you could start a franchise in it. I would not recommend doing that because the business is not there. You're actually risking a lot by just trying to start a new franchise. I would recommend trying to buy an established franchise. So what do I mean by that? I mean, you see an advertisement here, $100,000 to start one of these. There are also franchise businesses where someone already did that. Maybe they did it 5-10 years ago. I'm working on a deal right now that's that kind of situation. 5-10 years ago, maybe someone looked into starting one of these franchises. They did start it. They put the money down. They grew it into an actual good business. And you can buy that location or set of locations from them and take that over. And I'm going to give that an S tier. I actually think those are an amazing type of, you know what, actually, I'm going to give it an A tier. The one knock I will give on it is there are going to be certain restrictions with the way that you can run that business. And everyone is going to be different. There's going to be some kind of red tape that you have to move through. So it's not necessarily the perfect business to buy, but plumbing, I would say, is a great area. But if you, in general, if you can find a good established franchise business where it's actually already been started, it's been running for a few years, maybe it has a layer of management in place, it has people running it, and you can just step in as the owner, that is going to be a very strong business to buy because you're going to have the support of the franchise, but you're not going to have to go through the slog of being a startup. And if you're trying to invest in a business, the whole point is you don't want to have to go through that slog of going through the startup grind and the startup risk and all of that. You want the higher degree of success, the higher likelihood of success that comes from a business being established. You can get that in spades with something that's an established franchise. So definitely an interesting thing to look into. And there's a lot of great franchises, franchisors out there that have been around for 10, 20, 30 plus years now and have established many, many locations, maybe a multiple hundred locations of franchises that they've gotten started. And eventually people want to leave those. They want to sell them. They want to move on to a different part of their life, a different stage. And that presents an opportunity for you to step in if you can get the funding together, if you can invest in it. That's a great opportunity. Consulting business, I would not recommend. I think, I think these can work, but I think it's such a niche thing. There's a high likelihood that a lot of the clients are tied to those relationships that the owner has made with them. And I think there's not a lot of transferability unless you're buying a really big consulting business where it has many, many employees and the owners themselves are not the key relationship holders. I'm going to say D tier for a consulting business. They can be very profitable. Maybe they have certain recurring revenue contracts in place, but many times if you were to buy that business, it's going to struggle to continue serving the same customers without the previous owner in place. Charcuterie business, would not recommend that. Boutique fitness franchise. Now, taking the whole franchise thing out of the question, I already talked about those, but a boutique fitness business actually I think is a very interesting play. These are very popular right now, but I'm going to give this a C tier because I do think that you risk a lot of exposure to whatever the current economic condition is. These are trendy right now. These are popular right now. Who knows if that will continue to be the case? The market could change. And I think you should always be wary of a business that has a lot of stake in what the current market is or what the current trend is. Now, you get to a point where you can afford to start a business and you can kind of ride that wave. That might be a different story. But if you're buying a business or investing in a business that is riding a trend, there's a lot of risk in that. I would beware unless you have a lot of money to risk. You've already kind of made it and you've got kind of fun money that you can just play with. Then I would not recommend that. Let's do one more. I want to try to find an S tier rating for you guys. Honestly, this one might take an actual S tier rating. For a business this size, restoration business, this is such a needs based business that you're not risking a lot of exposure to client relationships if you buy something like this. Now, the one thing I would watch out for with something like this is that can be a little bit difficult to understand is what is their standing with the different insurance companies that they work with? Are they in a good position where they get referred a lot? Because a lot of the business here comes through insurance claims and things like that. So that's a great thing on one hand, because you have consistent business that you're getting and you're maybe not having to advertise quite as much and spend as much on advertising. And the clients that you're serving are very needs based. If someone has a flood in their apartment and their home or something like that, it's got to get fixed and it's usually covered by insurance. So you're not having to go through this rigorous sales process, but you would want to understand how do they stack up to the other restoration companies in their area when it comes to their relationship with insurance companies. And the other thing I would say with this one is you're going to be in a little bit of an emergency based business. So do you have good staff in place that's ready to service that and can operate that way and is used to operating that way? If you're going to have to step in and do that yourself, you might be in for a little bit of a reckoning as far as what that's actually like dealing with it on a day-to-day basis. It might be something really difficult to get into being in an emergency based business. But the upside on this one is there's always going to be places flooding. These businesses are not going away. And any kind of economic condition, there's going to be flooding happening. There's going to be restoration work that needs to be done. So they're always going to have good business. They're very recession resistant. So I would put this one up there in the A or S tier. Hopefully, if you're thinking about investing in a business, buying a business, maybe starting a business, and you're trying to get an idea of what market you should be in, hopefully this has helped you kind of think through that. This is a show that we do every week on Tuesday nights, right around 6 p.m. Eastern Standard Time. So tune in on the next one if this is something that you're interested in. And if you're watching this right now, if you're catching this before, let's see, May 26th, we've got a very exciting guest that's coming on the next one. Actually, two guests. They are multi 8-figure entrepreneurs that have they built a company up over $10 million a year, actually closer to more around $15 million a year by continuously acquiring other businesses and doing it creatively through SBA financing, part of their own financing, and finding creative ways to bring these deals together. They made a series of acquisitions in a space that I'm not going to spoil for now, but if you tune in, you can hear a little bit more about. And then they made a huge exit that was very impressive, that made a lot of sense for them. And now they've been able to start over that process in a new area. And so we're going to talk a little bit about how they did that for anyone who's trying to maybe put together a plan like that, acquire a business that you can then expand through other acquisitions. That's something that we're very interested in on this show. And we're going to hear from someone who's actually done that, who's been to the other side of that rainbow, and hear them break down how they did it and how they're continuing to do it. So tune in next week to hear that one. It'll be live streamed and recorded. And until next time, see you then.